Good morning. Hello, beautiful people of the world. It is episode 2 of Charts and News. We have a lot of objectively bad news. Good news for us because we buy gold, we buy Bitcoin, we buy Ethereum, we buy silver, and we're prepared. Great news for us. Okay. We're going to talk geopolitical tensions today, World War III, stock market capitulation ahead. 2023 going to be the worst financial crisis. Make 1929 look like a walk in the park. All right, let's get into this. All right. Xi Jinping's Saudi trip and the overthrow of Atlanticism. So Xi Jinping went to Saudi. You know what I'm saying? He's teaming up with the Arabs. They're cooking up these oil prices. They want to screw over the U.S. dollar. I actually seen that they want to get their oil trades backed by gold. So if you want to trade oil with these countries, these BRIC countries, they want to do it with gold, as it's not a fiat dog shit currency. Listen, guys, this is what you got to understand, okay? The fiat currency. Okay, let me go back here. The fiat currency is backed by nothing. It has zero value. The BRICS countries understand this. They understand that it has zero value. They don't want to keep trading this dollar that's worth nothing. Okay, so they're trying to get a new system in, get it backed by gold again. You guys need to get on gold and silver, on crypto, something that isn't your dog shit fiat currency before it's too late. Because if you don't, you will suffer just like everyone else. So knowing this and watching this video without taking action is basically useless. So let's move on. Today, natural gas catching a bid, and this is actually not even because of this Saudi news. It is because of Australia. So Australia tried to set a price gap on natural gas, and the top natural gas producers were like, no, not happening. So I guess investors got a little excited. Natural gas is up 11% in a day, which is nuts. I mean, natural gas has been trading like a penny stock, so it makes sense, but like, look at this gap. Look at that gap. I mean, I don't know. I'm not trading natural gas. I like to trade crude, even though they're kind of similar. However, we'll keep going. I couldn't believe that when I seen that. But, okay. This is another article. My Market Watch. Retail capitulation may be a New Year's gift for the stock market. I'm going to show you guys some charts, and I think we're very... much closer to capitulation than it seems. Obviously, you can't predict that, and when we do capitulate, you definitely can't predict the bottom. But, I mean, it's not looking great. I'll put it that way. And there's not much upside left in the charts. But their charts and technical analysis is not 100%, so you never know. But if any week is going to move the bar for investors, it might be this one. So, yeah, obviously, Tuesday, tomorrow, we have CPI Day. CPI Day is a very volatile day. The result of the CPI will not ultimately dictate which way the market's going to go, which people don't understand. So they could say we're expecting 7.3%, and then we get 7.4% inflation. Although that's a decrease from last month, because they expected 7.3, that could bring the market down. But even if CPI is less than they expected, the market could still go down, guys. This is why you should trust charts over news, okay? The market could still go down. Back in June, there was a 9.1% inflation print, and the market went crazy. It went up like crazy, okay? It depends on technicals. Is the market oversold or overbought? If it's overbought going into good news and we get that good news, they're probably just going to sell the news, okay? That's what tends to happen. So you guys got to watch out. Look at the charts like I'm about to show you, because this is charts and news, and charts are more important. And it will show, at least in my opinion, it's not financial advice, that the market is going to go down. So let's start off with the 10-year bond. So this white area right here, these two white lines, is a key spot, a key level, I should say. It was the bottom of this level of resistance here. It was a top, and we have some support here, and that's where we're fighting right now. It's kind of trading sideways in that area. It's either going to break up to the upside or down to the downside. Now, if it breaks up, this is the 10-year yield. So if the yields go up, that means the value of the bonds go down. That would be bearish for the stock market. And it looks like right now it's pretty neutral which way it's going to go. But I do believe it's going to go up, meaning the market's going to go down, and I'll explain why. But what I can show you is that this MACD is on the verge of rolling over. But there's other indicators that show the market's going to go down, which means this would probably go up. And right here I have the Dixie, which is the dollar index, and those charts look very similar. If you have a picture memory, you'd be able to tell. They look pretty similar. Okay, so it's fighting in this area like the 10-year yield was. This was a point of support. This was a point of resistance. It's in this area again. But over here, the MACD confirmed green. It doesn't want to break this level, but the MACD is green here. So there's a shot that it just breaks to the upside. Another indicator that we're going to break to the upside on the dollar and the 10-year yield, but break to the downside on the stock market is the VIX. So this is the weirdest thing I've ever seen in my life. The VIX is up 6% in the pre-market, while stocks are up as well. So usually when the VIX goes up, the market goes down. When the VIX goes down, the market goes up. But for some reason, let's get rid of this. Look, the VIX is up 6.1%. And I'm going to show you SPY is up in the pre-market. SPY, S&P 500. And even if you look over here, look. Well, okay, they're red right now, but you'll see. Yeah, so, which is weird. But, like, if you can see over here, the VIX is trading in this channel. The VIX has turned green on the MACD, which is bearish for the stock market. And it bounced right off this channel. Just like SPY bounced off of its trend line, being bearish, if you ask me. So look, we'll look at SPY right now. So look, SPY was in this rising wedge. Okay, it's breaking out of it. Bearish. It has 3 full candles below this rising wedge. That's bearish. What else do we have? Look at this. It's at a 200-day moving average here, which is a very important indicator for where the market's going. If you're below it, that's bearish. If you're above it, that's bullish. And usually if you can consolidate above it, it shows signals of a trend reversal. But let's see what SPY did. 200-day. So the blue line is the 200-day moving average. You can see it faked. It just went above for a little bit, and then it went right back down. So it rejected the 200-day moving average. How about the trend line? So you guys can see this is the past year. This is since 2022. Oh, okay, let's get this trend line going over here. Rejected right at the peak of that trend line. This is bearish. This is like bearish. It's showing history repeating itself. Now, why do I feel like we could capitulate this time around, maybe coming into 2023, is because this bottom of the channel has been tested 4 times already. Yeah, and the more it gets tested, the more it tends to be a weaker point of support. And I think that it could just break right through it this time around. But I don't know. I'm not like I said, I don't have a crystal ball. It's not financial advice. It's just what I see and what I think is going to happen. Now, this is all very bearish. I'm going to be shorting. You guys can... Oh, and this gap was filled. This gap was filled. So it did what it had to. It's right here. Triple top over here. This is bearish if you ask me. I would say 90% chance the market goes down this week. But we'll see what happens. Let me know in the comments what you guys think. This is all about seeing different perspectives, different points of view. And I want to know what you guys are thinking. Obviously, macroeconomically, things are not looking great. Geopolitics into play, not looking great. Guys, about the war, okay? The war is coming. Look at this. Which countries believe World War III is coming? It's coming. Everyone knows it's coming. They want it to come. I've explained this and I'll explain it again. Look, 81% chance. The U.S. 76% chance. Look, guys, they need this. These bankers, this government, whatever you want to call them, the elites, untouchables, whatever you want to call them, they don't want you to blame them. a economic crisis beyond your eyeballs is coming. And as long as they're not blamed, they don't care who dies. They don't care who gets killed. They don't care who's sacrificed. As long as they can blame Russia and China, who cares? And I hope you guys watch this and you tell people and you revolt and you understand that it is their fault. They do this out of greed. That's it. It's just greed. Their greed is the reason we are about to experience this insanely, unbelievably colossal economic crisis. Okay? But you guys need to hold the line. Get your hands on some gold, some silver, some land, some tangible assets, some Bitcoin, some XRP, something that isn't your dog shit fiat currency, okay? Canadian dollar, horrible. US dollar, even worse. I mean, like, British pound, dog shit. Euro, dog shit. All of them, they're just dog shit, okay? Just get your hands on real, sound money. Gold and silver. Bitcoin. Something. Okay, guys? I love you. You know what's happening? They will blame someone else. World War III is going to blame someone else. And it's coming. I'm going to say it every video. World War III is coming. It's actually already here, in my opinion. But anyways. It's nice seeing you guys. Ciao. Stay safe. Hold the line. Bye. Love you.